Hey, what's happening? What's happening? So in a previous video, I talked about building wealth and making that first million. I talked about 3 steps. And the first thing you needed to do was to find your why and really have that rationale and that reasoning behind you. Without the why, you're not going to be motivated to move on and be able to build the wealth and grow and do the things you need to do to achieve that, to make that first million and build that wealth. The second step I talked about was having an emergency fund. And then the third one was starting investing. Even if that's $100 a month or $200 a month, you can get that up over time, and then you can invest in index funds. So I talked real briefly about that. There's that 3-step approach. What I want to talk about in this video is the get rich for sure scheme, I like to call it. It's not a get rich quick scheme, but it's a get rich for sure scheme. And it's kind of taken off on that third step that I discussed. Once you can set aside let's say it's $100 or $200 a month, I'm going to recommend the quicker you can get to $500 a month, and that's a key metric, that's a key number, because that's the legal limit for something called the Roth IRA that you can contribute under age 50. So first off, I just want to say this is not a get rich quick scheme, but it is a get rich for sure scheme. So this is the way to get rich for sure, and I'm going to explain in this video the process whereby you can set aside preferably up to $500 a month, but even if you can start with 100 or 200, I'm going to talk about just what compound interest is. And then second, I'm going to talk about the math and explaining that and how that works over time. And then thirdly, I'm going to talk about some specific mutual funds. And then one organization, one company that I like, that I prefer, is called Vanguard, and a couple different funds. I want to give you a few names to look at. So first off, talking about compounding interest and compound interest. The idea here is that, and the way the math works is that, let's say you have $100, right? And that's gaining 10% interest per year on average. So the stock market is such, and the index funds that I'm going to talk about, that's such that they go up and down every day. The value of stocks and the value of mutual funds, value of investments, they can go up and down on a given day. Certainly that fluctuates value in the stock market and index funds. So the idea here is that there's an average yield or an average compound interest gain of approximately 10%. And I'm going to give you some specific funds that can make more than 10%. But I want to explain compound interest. The way that would work is, let's say you have $100 and it makes 10% per year on average, right? So that first year you'd have $100 at 10% interest, that's $110. The second year, if we talk about this over time, second year would be 10% of $110. So 10% of 110, now we're talking $11. So then that next year, that's worth 121. And then 10% of that is more like 12.1. So you keep adding that over time. And I'll draw this out in the next video. I can explain this and write this out for you. But the idea here is that the compound interest over time, it's gaining 10%, 10%, 10%, maybe 11%, maybe 15%. On average over time. So it's a simple algebraic equation. And if you did this over time and you set aside $100 a month for 40 years, making 10% per year, that you're contributing $100, another $100, another $100, and that's gaining interest, right? Gaining compound interest and accumulating at that compound annual growth rate, right? If you did that for 40 years with $100, you're pretty close to $1 million over 40 years, if that's at 10%. Some funds make more than 10%. Some funds make up to 15%. Some funds that I'm going to give you over the last 5 years, they've made 12 and 13%, but over the last 20 years, sometimes they've made more than 15%. So if you can just stick at that 10% metric and you save $100 a month, let's say you do that for a couple years, and then the next few years later, you're $200 a month, and then you can get up to that key number of $500 over time. And it's just simple math. It's indisputable, the math. In the algebra, it's just an algebraic equation. If you did that over time and you could get up to $500 a month at 10%, it's not $1 million. It's more like $2 million and more. And you can plug this in. One of my favorite tools is investor.gov, and the calculator tool. You could even Google compound interest calculator, and you can find one that works for you, and you can see it for yourself. So the idea here is then over time, if you're setting aside $500, which I said is the legal limit for a Roth IRA, and that's the next thing I'm going to talk about, is investing in something called the Roth IRA, a tool, an instrument called the Roth IRA, and there's various companies, several companies and banks and investment credit unions that you can invest in. I like Vanguard, right? One of the advantages of a Roth IRA is you don't have to pay taxes on that, on the profits, and so you're putting in kind of like a glorified savings account, but there's no tax on the interest, and there's no tax on the dividends that you make. So if you're putting in $100 a month, but you can put in up to $500 a month, if you're doing that and that keeps growing, accumulating 10%, 11%, 15% on average in that Roth IRA, the legal limit you can do is $6,000 per year under age 50. At age 50, then it goes up to $7,000 a year. So it's $500 a month until age 50. That's the maximum legal limit. And you put that in there, it grows tax-free. It's accumulating 10% plus interest per year. And over time, the simple math is that will turn into $1 million or more if you can do that over time. And like I said, it's not a get-rich-quick scheme, but it's a get-rich-for-sure scheme. And it's not a scheme; it's math. So it's a way to get rich for sure. So with the Roth IRA and setting aside that money, assuming that you're growing at least 10% compound interest, and putting in up to $500 a month. So it's not easy to do in your teens. That's not easy to do in your early 20s for many people. But $100, $200 a month, you might not miss that. And if you can get up to $500 a month, then that will accumulate and that will grow into $1 million. Over time, and you're just setting that money aside in something called a Roth IRA. I like the company Vanguard. So Vanguard.com, a bunch of different instruments and tools you can use on there. I like the Roth IRA. Open that up with Vanguard in the different funds that they sell. And so I'll talk in the next video the difference between an ETF and a mutual fund. But basically, an ETF, an exchange traded fund, similar to a mutual fund, really is an index fund. And 3 ETFs that I really like and I recommend. One is called VOO, and what that is it's essentially the top 500 companies, the top Fortune 500 companies, and that over the last 5 years is closer to 12% over the last 5 years. So it's more than 10. There's another fund, and I'll talk about this in the next video as well about the importance of diversification. But there's another fund called VTI. And they have a mutual fund as well as an ETF. I prefer ETFs and I recommend ETFs, and I'll explain that in the next video as well. But the ETF VTI, and that's the total stock market index fund, and that also has been north of 10% over the last 5 years. So it's down. It might be down a little bit over the last year, certainly over the last few days, and maybe the last week it's been down. But over the last 5 years, which that's what we're looking at, is over a 5-year, 10-year, 15-year, 20-year average. If you're diversified and you're in different ETFs making close to 10%, that will turn into to profits over time and gains over time. And if it's in the Roth IRA, and I'll explain how to set that up in the next video as well, you can basically enjoy the benefits of that interest and dividends that's making and not have to pay any tax penalty on that, as long as you don't take anything out of that. As far as the gains go, you don't have to take anything out until age 59. And I'll like I said, I'll talk about the next video about setting up the Roth and the advantages of the Roth IRA. One more fund I want to give you is VGT, and VGT is similar to the previous funds. It's an ETF fund, and there's a mutual fund equivalent, but VGT is essentially it's the technology. It's a lot of the technology and the growth companies. And so we think of Fortune 500 companies, but especially those bigger tech companies. They're really big into Apple, Microsoft, Tesla, among others. And so, and they've also cleared north of 10% and 15%, depending on the metric over the last 3 years, 5 years. It's done extremely well. Even over the last year, it's a little bit down. Even though it's a little bit down, we're looking at, again, a 5-year, 10-year, 15-year, 20-year average. And the quicker you can get to $500 to set aside per month, start off with $100 at age 18 if you can. Maybe age 20 it's $200. Maybe at age 25 you get started with opening up a Roth IRA and putting some money in there. If you can get to $500, it's simple math. It's indisputable. It's an algebraic equation. And like I said, I'll write that out. I'll talk more in depth about the Roth IRA next, but in the next video. But again, 3 steps. So around ways to get rich for sure, not necessarily quick, but to get rich for sure. So the importance of compound interest, that's what we talked about, setting aside money. And so over time, the growth over time that you can accumulate wealth and dividends and that compound interest that you're accumulating. The quicker you can get to $100, $200, and the quicker you get to $500, the quicker that money is going to grow into wealth, closer to $1 million over time. Again, we're talking closer to 30 years, but you're setting aside that money and you get in that habit. And then I talked about Vanguard.com, and I'll go into more depth in the next video, but what you can do there is invest. And I like 3 ETFs that I recommend, 3 of my favorites that I've made thousands of dollars, not millions yet, but again, over time, I've made thousands of dollars over the last several years. The ETF VOO, which is a Fortune 500 index fund, top 500 companies. VTI, which is a total stock market index, kind of representative of every single company in the stock market. And then the third one is VGT, which is around tech. And again, I'm going to go into depth in the next videos about some of these things that I've talked about, some of these ideas. Hopefully, this information was useful to you. And we'll see you next time. Be peaceful.